Okay, welcome everybody to Wall Street Reporter's next super stock live stream, January 18th. I'm very excited to have a brand new company to introduce to you. This could be one of our next 10 baggers for 2022 to start off the year right. So first, Energy Metals, FE on the CSE, FEMFF over the counter. Now we had a slight technical issue. The CEO Gurminder was not able to join us, but we have the head geologist, Craig Alford, here to join us and to run through the presentation, answer your questions. Craig, welcome.
Hey, good to be here.
Absolutely, Craig. Listen, so for all the investors watching the program right now, really, we're in a very exciting time. I think this is, lithium, the battery metals, energy metals. This is a generational wealth opportunity. Absolutely the biggest transformation in our lifetimes, and this is without exaggeration, is electric vehicles, is the shift going from oil and gas, the combustion engine, to electric vehicles. And this is not again, it's no longer pie in the sky. It's mainstream. We're seeing Ford, which was a dusty old company, now is a high flying stock. Why? Because they're launching electric vehicles. And what is the common denominator? Who is the richest man on the planet today? The hottest stock, the biggest stock, is Tesla and Elon Musk. Just like who is the richest man on the planet at the turn of the century? It was John D. Rockefeller, and then it was John Paul Getty.
Yeah.
So
yeah.
Rockefeller and Getty were the richest men on the planet. Why? Because they had oil, and just like batteries are, these batteries are essential to electric vehicles, and that was a massive wealth creation opportunity that created, electric. So oil was exactly at the turn of the century what batteries are today. So if you missed out, if you were born, after the 1920s, if you missed out on the oil and getting in early on, Standard Oil and then Getty back in the 1920s and making billions of dollars back then with, Rockefeller and Getty, battery metals, lithium is the next big opportunity. We're seeing it right before our eyes. So, Craig, what we're going to do is the format for today. I want to get Gurm on for the next live stream. We're going to get his computer up to date and get it.
Yeah.
What we're going to do today
Ship him a new computer.
Yeah, we're going to have you run through the slide deck. We're going to have you do the presentation, and then we're going to open up for questions for audience. We have a lot of really informed, mining resource investors. So hopefully we're going to have some really good questions. And again, but the main thing that everybody wants to know, Craig, is, what's the path for, First Energy to be a 10-bagger stock?
Sure.
What needs to happen for this thing to go to $4 or $5 in the next, 12 to 18 months, hopefully 12 to 18 days, but 12 to 18 months, that would be, a little bit more conservative. So we're going to have to, that's going to be the main question that, we're going to have to ask you. But with that said, let me do this. Let me turn it over to you to get this, to run through the presentation, introduce everybody to the story that is First Energy, what you're doing in the lithium space in North America, and then we'll open up for questions. And guys, decide for yourself if FE is going to be that next 10-bagger stock. With that said, Craig, let me get you up on the screen here. And,
just a brief little bit about myself. I'm a geologist. I've been working in the mining industry for over 37 years. I've worked in 34 countries. And, we tend to go where the wind blows economically, if gold is hot, if nickel's hot. But right now, perhaps the hottest metal on the market is lithium. In fact, in the last 14 months, it's gone up 10 times in value per ton. So, the automakers, they've all decided to switch over to this within the coming decade. And it has caused a bit of a choke point with getting their supply chain of lithium behind them. So, one of the aspects of a great company, of course, is good management, as well as an excellent project. And we have an excellent project, and also we have an excellent location. If I can just go through the slideshow a bit here for First Energy Metals. We have a project in Quebec, Canada. It's within the Abitibi of Quebec. The Abitibi belt is very well endowed with minerals. Calculations right now for gold put it to be around 300 million ounces. It also has nickel, and it also has lithium. And there are quite a number of projects ongoing with junior mining companies, larger companies, like Piedmont Lithium, for instance, that are exploring and developing lithium resources within Quebec. In fact, the Quebec government has signified that it's really behind the lithium mining industry, and it's actually working with, I think it's Mercedes, to try to create a battery with the Hydro-Quebec. So they're 100% behind lithium and lithium exploration. The project is quite large, one of the larger projects that a junior mining company has, and it's located within 40 kilometers, so that's just around 25 miles away from the mining hub of Val-d'Or. Val-d'Or, if people aren't familiar with it, is a very rich area. Agnico Eagle is there mining gold. There's with a dozen mines within a stone's throw around the area. The actual name Val-d'Or means Valley of Gold. So this project actually has a history where in the 1950s it was explored for lithium, which is really nice because often these days when you go out to find lithium, you don't have a lot of previous analysis for lithium. So we're focused on what we see as a massive deficit in the market. The automakers pretty much all now have signified they want to go all electric. Ford, GM, of course, Tesla's already been there. And this, if they have, succeed in their plans, there's going to be a big deficit in lithium. So the crunch is already starting to happen. And we've seen the price, as I mentioned before, go up 10 times, which exceeds what was originally thought to be the upside of the price. And a lot of people need to lock in. I think that Renault has done a deal in Germany with a Vulcan Mining. Tesla has done deals with Piedmont Lithium as well. Some other companies to secure nickel, to secure lithium. So a lot of the battery metals, we're going to see big moves towards locking in offtake agreements to get their lithium and get their metals. The electric vehicle sales so far within the US and Canada have not been as big as what we've seen in China and Europe. We see that market penetration for lithium vehicles, both the combination of gas and electric, as well as pure electric, market penetration is now 20% in those areas, Europe and China. Whereas still within the US and Canada, it's around 3%, but there's been a very large change over the last year. And considering the last year, for all of us, it's been a little pokey with the pandemic, but we've still seen 100% increase year upon year. And as I mentioned, the price for lithium carbonate has gone up 10 times, and actually the price for spodumene has actually increased further than that. So there's just been a massive demand for spodumene, for lithium metal all worldwide. I should mention there's three major types of lithium deposits in the world. Those that are in the hard rock, spodumene, pegmatites, the ones that are a brine like we have in Chile and Argentina, and those that are locked in clays, which are found, say, Thacker Pass, Nevada, as well as in Mexico recently with Bacanora. So the actual project, as I mentioned, is located just west of Val-d'Or. It's We can drive to the project. There's water, there's rail. So it's very good in terms of its location. You know, I want to say I'm a Canadian, and there's a lot of projects in Canada that are too far north or too remote, and it really adds into the cost of developing those projects. It's almost unrealistic to see them get developed within a decade. And this decade, this upcoming decade, is we're going to see the biggest need for lithium. So it's good to be within an area that it's feasible to develop and cheap. We don't have to build, you know, a road that's 200 miles long, or a power line, or you know, have bad access to water and manpower. So all of those aspects are really well covered in this region. As you can see here, the Augustus lithium project is located within a very active area. We're the largest landholders in that area. Our claims are in red and in sort of a darker green here. I hope you can see that clearly. And there's a very exciting location in that we're right next door to an actual lithium mine called the Lithium Americas Mine, Quebec Lithium Mine. And I think we're on a very powerful trend, and that we're just west of that trend and within it. There's also a new mine, the Aether Lithium, and both of those mines, Piedmont Lithium has a percentage of them, with their partner Sayona Mining within that area. In 2021, we saw that we got out there and we started drilling right away. I mean, a lot of juniors, they tend to sit on their projects. Senior companies do this, of course, but we're very aggressive. We did 5,800 meters in 32 drill holes for our phase 1 program. We pretty much hit lithium in every hole. And for the most part, a lot of the structure of that program was based upon the previous 1950s drilling. So we needed to reconfirm that it was actually there. And we did 2 drill holes for metallurgical testing. So phase 2, our next program has actually started. We announced that just late last year, December 6th, that we're beginning our new phase 2 drill program. So this program, this is the exciting part for investors, is that the biggest lift you often get in a junior mining company is when you go from having no resource whatsoever to a resource, and especially a resource in something in critical metals like this. So we hope to generate an inferred resource this year with, as we drill in a more technical manner, the program will be basically stepping out in a rigid program in order for us to build that resource. So we're going to follow up on, obviously, the results of 2021. We're going to hit new targets. For instance, the Canadian lithium pegmatite prospect, which didn't get drilled last year. And that's got some very interesting intersections, up to almost 300 feet. So that's a very exciting target for us. In general, the area covers lithium pegmatites that are sort of east-west, but a little bit northeast-southwest. And the beautiful thing I see here is we've got a fairly good program to identify and move along in an east-west manner, and that should build a resource for us. As I said, the previous drilling, which you can see here in black holes, a lot of that was a little bit more random in order to simply assess and redo previous drilling. So we want to confirm it's there, it's real. The old results needed to be updated for, in Canada, we have a 43101 national instrument, which we have to adhere to in order to build resources and get results out. So we have a very good 1 to 1.2% lithium content. I know for everyone who's ever failed an exam, 1% doesn't seem like a very high number, but in terms of a mining ton of rock, that represents 10 kilograms of lithium dioxide. So in a car, the Tesla, say Model 3, uses about 10 kilograms, 22 pounds in a car. So If we come out with a resource, say 20 million tons, that would satisfy 20 million cars. This was just a map quickly to show people where we're located. So the reddish orange claims and the green claims, and within the area, the two mines now that are identified, the two reserves, Authier and the Quebec lithium resource. Both of those are owned by Sayona and Piedmont in a joint venture. And the Quebec lithium was in previous production in the 1960s and still has a pretty good size resource of around 19 million tons. So this is what I find very exciting with where we're located. Often you've got these belts in the world. I think number 3, perhaps for US people, they might be familiar with the Carolina tin spodumene belt. It's near Charlotte. It's only about 25 miles away from Charlotte. It's where Piedmont Lithium's flagship projects are. So all of the maps on this slide are actually posted at the same scale. So number 2 here is one of the largest lithium deposits in the world. It's called the Greenbushes within Western Australia. Then you have the Carolina tin spodumene belt. Then you have a fairly new area up in northwestern Ontario, Electric Avenue they call it, from the PAC and Spark lithium resources. And then there's our area here. And it shows that we're really on this interesting trend with a lot of lithium showing. You can see these dots here within this Quebec-Licorne belt, I call it. And I think that that's the future where we identify what's going on here. You can see this red zone central within the area. And all these green dots are lithium showings. So we have a very interesting, almost 3 miles long area of high-grade lithium showings that we are going to be approaching with geophysics and drilling within the coming months. So we have a large lithium spodumene pegmatite zone with assaying the same grade as the Piedmont Sayona Quebec lithium deposit. So I think we're on trend here to develop something very similar, if not 1 or 2 deposits within our zone. Okay, so that's about all I want to say geologically. Getting back to you here.
Hey, can you hear me?
Yeah.
Okay, fantastic. Craig, thank you we got the brief technical overview.
Yeah.
Hopefully we have some good questions from especially all the Canadians in our audience who understand mining. The Americans just know how to buy the electric cars. We're very good consumers here. So bottom line is, we understand the investment thesis, lithium, battery metals. This is like the new oil, what oil was, in terms of wealth creation in the 20th century, early part of 20th century, where fortunes were made. We're going to see the same thing happen again with battery metals. I think it's because, again, the battery metals like lithium, it's just as essential, because without this, you got no electric cars, right? Without the batteries.
No.
So so let's get into the path for forced energy. What needs to happen? Walk us down the path, the potential milestones that you need to hit for this thing to move up to that 10x to a $4-5 stock in terms of that. So that would be an increase in valuation to $200 million. Right now you have a market cap of 20 million. What needs to happen for FE to be worth 200 million?
Sure. Okay, well, right now, when we compare ourselves to one of the nearby deposits, particularly Authier deposit, we almost exactly have the same grades and the same physical presence within just one of our showings. And that deposit currently has a resource of about 20 million tons of lithium ore. So, as I said before, that would satisfy 20 million cars. And recently, a project in Ghana by Atlantic Lithium, I think it was, They have, again, the same size, around that 20 million, and it represented about 3.2 billion in future, production. So these are multi-billion-dollar deposits. So if we can get to that 20 million roughly resource area, hopefully this year with drilling, we're going to be jumping up in value. I mean, I see that as a massive lift for investors.
Okay, so basically a 20 million ton resource is worth how much in today's market valuation?
Well, I actually, that's a good question. I should have prepared an answer for that, because typically when we have the actual value, but you have to subtract production costs and capital costs.
Yeah, net present.
But it's in the billions. I mean, their expected revenue from that 20 million ton deposit was 3.2 billion. So that's revenue, projected revenue. So it's very sizable, and that's probably, they didn't. Where did they pick their value of their project? Because if you had done it just 3 months ago, lithium carbonate prices were much different. I mean, the rise in lithium carbonate prices, who knows where it's going to stop, where it's going to plateau. So,
but let's say if you have if 3 billion is the total projected revenues, so the net, let's say net present value of that would be, I don't know, let's call it 600 million at least.
Yeah.
Today's plus. So that would give, in theory, you have a path to be not a 10 bagger, but a 30 bagger plus. And we got to go through the numbers. Next time we're on, we got to have all these comps ready, because
definitely.
we got to have this, and we got to get Gurm on. But yeah, so basically, there's a path for this thing to be a 30 bagger, 30x. Okay, so walk us through kind of the program, the drilling program, because obviously as you get some more progress, the stock is going to start to step up as we get closer to that, that resource date.
Yeah. Okay. So, I know I went through the maps
as you get de-risked.
Yeah. But the Aethera lithium deposit, the actual strike length of that thing is about 800 meters. So, what is that? Roughly times 3 for a U.S. audience in terms of feet.
2,400 feet.
Yeah. So what I'm trying to say, though, is we have the same right now with just one of the prospects on our large claim block. We have a known showing that's about 825 meters long. So we have the same physical dimensions as they do. They've drilled, of course, more than us. So that's the main difference, is drill, drill, drill. We need a systematic drill program where we go, every 200 feet, every 300 feet, so we can build a resource that's acceptable by the 43101 classification here in Canada. And it's always sort of like a gold standard, even within the US, is to hold up a resource or reserve to those standards. That's worldwide. Australia has a JORC category. It's exactly the same as the 43101. So that's all it's going to take for us, is that this year we keep our head down, we concentrate on a systematic program that allow us to build out a resource. So far, we've hit lithium everywhere. So it's just a matter of connecting the dots in a 3D model. And as I said before, this thing is almost 3 miles long. We have 3 miles of lithium showings. So I'm hoping that some geophysics will help us connect those dots to show that this is based along one structure, which I think it is. And that'll help us perhaps connect other showings to the main structure.
Okay, we're going to get into some audience questions in just a second here. Okay, so bottom line is this thing could be very, very compelling. You got 30x upside. How much? Okay, so you got 20, potentially there's a resource of 20 million tons, and that's enough for 20 million cars. So how much lithium? What's the value of the lithium per car? In other words, how much do you make basically for every car it's sold? This is kind of a rough.
Yeah, that's a good question.
Different size.
I will say one thing: like it would be more likely if we're hitting significant intersections and we have that we would be bought out. I mean, the big players are going to start dipping their hands into securing their supply chains. Already we've seen Piedmont jump into that area that we're in. That was very recent. I think it was just August of last year that they secured the 25% of that Quebec lithium mine. That's just to the east of our project. And as I've shown on that slide, it's in that same east-west belt. That resource is around 19 million tons. So it's not going to take long for we're going to be picking up a phone call from Piedmont or from other large mining companies, I think, in the future. So for us to get to the stage where we're actually the ones to build the mine, I'm not too sure. There may be a buyout.
No, this is realistically. I mean, look, in the resource game, I mean, the money is made not by the time you get to the mine. The money is made between now and when you get the resource, and then
Right.
company gets bought out or whatever it is. So this is
But I just think that's a giant lift for investors, though, is that we're going from no resources, zero, to we're going to have a resource this year. We've built a program designed around creating a resource. And that I think that's the big lift for investors. And we're doing it at a great time for lithium. There can be no better time. Because, this is really just the start of it. I mean, Ford, GM, etc., they're basically going all electric by 2030. So this is the greatest impetus at the start. I mean, it would be like, if somebody gave you lots of land in Saudi Arabia back in the days, right, before oil, you would be the richest man in the world. So this is really something to pay attention to for investors, this sector.
No, I mean, it's
First Energy.
No, it's exactly it. I mean, it's happening faster than I think than anybody expects. I mean, it's happening. I was not expecting like the mainstreaming of EVs. Like I'm seeing on the road, like it's just a done deal. It's like I was going to give an example. You ever see? There's a famous movie called The Last Samurai. Have you seen this movie?
Yeah, sure.
Tom Cruise, right? So it's about the last samurai, the 19th century, and Tom Cruise. He basically becomes a samurai, and there's a battle. Or this is where I think this is like 1900 circa, and all these guys, all these samurai, they all have. I mean, they're superior warriors. They're trained in sword fighting, and then they're rushing up to this hill to basically wipe out these guys. And you see some guy, the other guys, they have some guy who's like some schmuck with like a machine gun. They've never seen a machine gun. All of a sudden, the guy starts with a Gatling gun, and he just mows like all the it's over. And that was the moment when basically the gun overtook the sword. And we're saying that like
it's a paradigm shift.
Is taking over. Yeah. So it's an incredible opportunity. But bottom line, okay. So short term, we could see potentially the stage is set for this thing to be a 20 bagger or 30 bagger plus in 2022.
Mm-hmm.
If you get this,
I think so. I mean, hopefully people pay attention to companies like ourselves that have great projects and, aggressively moving them forward. That's one thing I really am proud of about First Energy is we're not just walking around, waving the program, and we've already got to it. It's the drill's there. It's turning. So phase 2 was originally designed to start in February. We started in December. So, we're patting ourselves on the back a little bit for getting out there right away and getting some results. So there should be good news flow for people. That's important. First of all, we have some results that are still from phase 1, a couple holes left. We've got the metallurgical testing. So that's very important. It's another thing we've sort of leapt ahead of ourselves a bit and said, can we viably mine this? And that will answer that question. So we're going to be conducting those metallurgical tests. SGS Labs, one of the best laboratories in the world, will be conducting those tests. That will allow us to know this is a viable project. Basically, spodumene is fairly easy in terms of grinding and some flotation to extract and concentrate the lithium. And this is done in Western Australia. In fact, spodumene deposits currently represent the biggest contributor to the lithium market in the world right now.
Okay.
We often think it's Chile and Argentina, the lithium triangle, Bolivia, Chile, Argentina, but it's the spodumene deposits that are really carrying the weight right now for the electric car industry.
Craig, I know you're limited for time, so I'm gonna go to the audience questions. Hopefully, we can get everything answered. Some big questions on, what's your burn rate right now, and do you plan to raise cash anytime soon?
We did raise some money, which was sufficient for the planned phase 2 program, and we hope to do another round of financing probably in the coming 2 months. But as we build up the company a bit, as we build up the share price a bit, so we don't have so much dilution. I mean, it's good for investors that we don't dilute ourselves to hell and back. So we want to see, we put out a result. It should be a nice increase in the share price, and we can do a little bit of raising. We would like to extend the phase 2 program. Currently, it's basically a similar amount of drilling as the phase 1 program, which was just under 6,000 meters. So in order to go from a resource to reserve, you need more drilling. So we will definitely be raising cash. Our burn rate is not that bad. Our monthly operation costs are typically fairly low. So it's really just a matter of meters drilled. And the geophysical program that we're going to conduct is mainly, it's fairly cheap. We can do it by air.
Okay. Maury's asking, when do you expect drill results for phase 1 and or phase 2?
All right. Well, it's just a matter of the laboratory that we're using, how quickly we can return results. It can be anywhere from 3 weeks to 6 weeks to get results back from the lab. So, it's not too bad of a delay. And as I said, we've got a little bit left from phase 1, and then we're into the phase 2 results for people. So within the coming weeks, we should see the first, I think in early February, we should have some results from phase 2.
Okay. So there's going to be news flow starting in the next few weeks, roughly.
Yeah.
Okay,
and it'll be constant news flow, thankfully, because, when we finish a hole, we're on to the next one. Our drill movement isn't so large, so we can get set up quickly, get going, and get more samples into the laboratory and back out to our audience.
Okay. Oh, so that's actually, that's an important point. So it's not like you're moving drills like, a quarter mile or a mile and all that. You're basically moving just it's very close by.
And most people, maybe if you're living in a warmer climate, you wouldn't understand. Drilling in the winter is actually preferable because all the lakes and rivers are frozen. So you can just drag the drill across lakes and rivers. So it's really nice. Whereas in the summertime, you got to go around or helicopter the pieces of the drill to the next place, where often you can just drag it in the wintertime. So it's quite nice.
Mike is asking, does the lithium come in various grades for production? Is it various grades? And if so, what do you have?
Okay, well, that's a good question. I mean, when investors, that's why I sort of mentioned it when I was talking earlier. When you see 1%, it doesn't sound very exciting. I mean, we're used to seeing big numbers for gold or nickel, things like that. People don't usually talk in terms of percent, but 1% is 10,000 grams per ton. So if anyone's reporting a gold result of 30 grams per ton, or that would be 1 ounce per ton, it's big news. Okay, but that our 1% represents 10,000 grams per ton. So it's that, like I said, if you do the math, it's 10 kilograms per metric ton. Which is in the imperial system 2,200 pounds roughly. So we're coming out with 22 pounds of lithium dioxide for each mining ton. So that's a very good grade, exceptional grade. Now, a lot of the drill program so far has shown that we've got 1.2, 1.3. So we've exceeded that 1% threshold, but sometimes it's a little bit low. But in terms of average grade, we'll probably have 1.1, 1.2% across our resource, which is an excellent result. That's typical mining sort of grades worldwide.
Okay. I think Mike is asking, I'm not sure if I think the question is, do you have projects outside of Toronto or just actually outside of Ontario, outside of North America?
Yeah. No, we do not have anything outside North America. We've decided to keep within North America. We originally were in discussions about something in Australia, but we would like to concentrate on North America. There's a lot of car manufacturing here within North America that's going to need to be serviced by North American assets. I think it's important for people to realize the Chinese have been the ones for the last about 2 years going out and sort of dominating, grabbing up deposits. I myself used to work for a Chinese mining company called Zijin Mining, and they recently did a near $1 billion deal in Argentina on a project. So they're also on the hunt to grab lithium. So the Chinese have been out there securing lithium. It's time for the Americas to do that, make sure that we have a secure and domestic supply for our automotive industry.
Okay, so Maury's asking, what's the value of lithium? Like, is it goes ounce, grams? What's the what's the price? How does it?
It's typically shown in per ton. Just if am I still sharing my screen?
No, I can get your slide. Yeah, let me hang it. Okay. Yeah. Oh,
okay.
No, it disappeared.
So just a second. Share. Let's take a look at what this is. Can people see that?
Hang on a second. Yes. There we go.
Okay. So this is tradingeconomics.com for the commodity lithium. And you can see here what I was talking about in late 2020. The price here was around 39,000. Now this is reported in Chinese dollars or yuan or renminbi. And that's because the Chinese are the ones that go out and grab everything. But in terms of US dollars, at the very end months of 2020, it was around 5,000 US dollars per ton. And now today, it's $51,000 per ton. So you can see that just if you had purchased a ton of lithium carbonate, you would have had a 10 bagger. And just slightly over a year, this has happened. So this really goes to show how hungry the market is and how people anticipate really the choke point, like Tesla, GM, Ford, all these companies, Renault, Volvo, they're going electric, but where are they going to get their lithium from?
That's I mean, this is I think what's I think it's an incredible opportunity because what's interesting is from an investor standpoint is you have a lot of electric vehicle companies. You got a lot more and more coming. A lot of cars coming out there. We don't know who's really going to be the winner. I mean, I'm sure there's going to be multiple, but we don't know if Fisker or Lucid or there's all these new names, right? Tesla, but doesn't really. But the real money is going to be made by supplying the picks and shovels, so to speak.
That's right.
These guys is they all need the lithium. They need the energy metals, and no matter who the winner is, you're going to be there supplying them that
exactly.
lithium.
And that's, I mean, a lot of people, they don't know what lithium is. It is a metal. It's number 3 in terms of the periodic table. And when you can think about most metals, you think about pretty heavy things. Well, lithium in itself is actually lighter than oxygen, which makes it such a good metal for a lightweight battery. I mean, this is why, if people used to pick up a car battery, they weighed a ton. But when you pick up a lithium-ion battery, it's very light. That's why it's such a preferable battery for laptops, for phones. I mean, we can't forget about that demand industry too for lithium batteries. It's huge. For cars, of course, they have a lot more batteries involved in a car, and also, companies are designing 18-wheelers that will be battery operated. I mean, it won't be long before we see self-driving lithium ion powered trucks crossing the nation.
Yeah, there's gonna be. I mean, listen. It's just like oil was. Used to be. Used to be. Steam power was what moved transportation. Was steam power, ships.
Yeah.
Trains. Then we moved to oil, and now it is everything is going to batteries, electric vehicle, electric motors, and everything is gonna shift at some point. It's gonna be ships. Everything. It's just
Totally.
a question of time.
I mean, I can easily see it's not going to be that much longer before we have, a lot of self-driving, battery-operated cars within our cities. Most people often, when they purchase a car, of course, they can talk about, the mileage you get on a car, but the cost savings alone, as gasoline prices rise and rise and rise, I think are going to change a lot of people's minds. We're already predicting, Goldman Sachs are predicting back to $100 a barrel for oil. People are going to get tired of that and realize, geez, I can charge my car.
It's also
rates are low.
Yeah.
And I can drive to work. When you think of just traffic jams too, think of how much oil is wasted in traffic jams around the world. It's astounding to me. I've lived in a lot of big cities. I've seen traffic jams in Beijing and New York, the Toronto area, on and on, Chicago. And I'm just thinking, we are burning up all this oil for going nowhere. It's nuts, And when sometimes I've been in San Francisco, I'm behind a line of cars. They're all electric. There's no exhaust.
Yeah.
There's no exhaust. So I think
no. It's California always leads the way. This trends always start on the West Coast, and like they've been making a massive push for the EVs and it's really just. I think they're actually no. I think in California they just outlawed leaf. There are leaf blowers or like
that's right, gasoline powered leaf blowers. I saw that.
Yeah, in a few years, like everybody's gonna have. So this is the push. It's starting there. They're gonna make everybody go to electric, leaf blowers, and then it just and everybody's making. I think what is it in Europe? A bunch of cities are already making no combustion, and they're making basically illegal.
Oh yeah, I mean, I think Norway was one of the first countries to declare they'll have no electric vehicles after a certain, I think maybe 2030 or earlier.
Yeah,
so
it's coming up.
India has actually motioned that it wants to be quite a high percentage electric by 2030. China already is making plans for buses, trucks, things like that. So we're going to see a big shift, and it's all happening sooner than later. As I mentioned, the market penetration for electric vehicles is already very high now in Europe and China, 20%. I mean, we haven't seen that kind of market penetration. And I often state, I think for each 1% of market penetration of electric vehicles, it requires another 70,000 tons of lithium. So it's going to be a crunch. And also, speaking of all this oil that people will abandon, if you're an oil executive right now, and they still have a lot of money, Exxon, etc., they will probably start looking for lithium and start investing in companies. I would be talking, if I was on the board of Exxon, I'd be going, hey guys, let's see what we can invest in for backing lithium exploration.
No, that's interesting. I know like BP, British Petroleum, I think they're basically shifting to being an energy company, not an oil. I mean, they're really getting into oil. So it's an interesting point you're making, is that essentially the thing is right now you're sitting on this valuable asset, and I think this is the time where you want to have these assets in place for when the market is really, the values are just increasing and increasing. I don't know if they're going to keep going like that chart you showed. I don't know if it's going to keep going parabolic, but who knows? But it's a question from Dino. He's asking, So 2 weeks ago, you're saying the stock was 26 cents. Today, it's 37. In your opinion, what contributed to the stock price? Was it the acquisition of Falcon Lake?
I'm not sure. I mean, when a stock goes up, I'm always reluctant a little bit to talk about what's driving it. Partly it might be attention, more eyes on the stock. We had some discussions with parties in Europe recently, so perhaps a lot more investors are starting looking. Falcon Lake, a recent acquisition by the company. It looks very interesting. It's at a very early stage compared to what we have in Quebec. However, we're going to be doing some work in 2022 here on it, pushing that forward. So, as we grow our company in value, we can also look to where areas right now, in terms of, as I showed in Quebec, there's a lot of lithium exploration. However, in northwestern Ontario and southeastern Manitoba, there's also a lot of lithium exploration, a lot of development ongoing. So we have our eyes open to future projects there.
Craig, last question. I know you got to go in 2 minutes. So I want to ask you, in your opinion, what are the top 3 reasons why investors should consider the stock? You have to give 3 reasons, 1, 2, and 3, top 3 why they should consider First Energy today.
Okay. Well, as I think I've repeated a couple times, we're aggressive. We don't just sit back and drag around a property for marketing. We get going. We got going faster for phase 1. We got going much faster for phase 2 than the original February plan. We have a project that in the 1950s was shown to hold lithium, and we've following up. We've proven that all those old results were real. In terms of the National Instrument 43101, you can't talk about previous old resources. They did have one for that region, but we're going to rebuild that resource. We're going to come out with something this year for investors to get excited about. We believe we have an active belt with a lot of lithium showings on it. As I showed, we have almost 3 miles of showing after showing of lithium. So that's very exciting. We may have 1, we may have 2 deposits there. We've got, as I said, where you find one deposit, you typically find another deposit. So to me, as a geologist, that's the most exciting aspect, is we've got a really good belt with a lot of lithium involved with old exploration, and we've proven out that it's even better. Our assay results have typically been better than the 1950 results.
So Craig, in summary, basically the bottom line is that First Energy, you got the 3 things, the 3 ingredients for one of our next super stocks, which is 1, you're going after this massive, potentially it's a multi-billion-dollar opportunity. The stock could be a 30x plus. There are multiple catalysts in place right now. You got this drill program that we're going to be seeing the news flow from, and the company is now at this inflection point where this is the year where we could see the resource, which is could be the driver for this thing to be a 20-30 bagger stock.
Right, and that's another aspect, is we're not at a high price for investors. We're not at like a couple bucks right now. We're cheap. I think anybody could probably invest in our company and see a good return. The winds are at our back right now. It's been we're not in any native land issues. We're in a pro mining district. You can't get any pro mining than Val-d'Or, Quebec. If anyone wants to look it up and see how many mines are in the area, as I said, you throw a rock, you've hit 3 people who've got mining experience. And location. We're in an area where there's rail, there's water, there's roads, and there's excellent human resources, and with a government that's backing lithium mining. So this should be an excellent time for us.
Excellent. On that note, Craig, I want to thank you, and hopefully we'll get you and Gurm on for the next show.
Sure. Excellent. All right.
Thank you everybody for joining. We'll see you in the next one.
All right. Cheers.